Welcome to TheoTrade. This is Don Kaufman. Here we are. It is April 24th, 2017. We've got just about 5 minutes left inside of the trading session with the S&Ps up right now about 25 handles. That, of course, is 25 points. And if you're looking at this and thinking it's an astounding rally after and following the French election news, listen, the rally as of right now is well within the means of what was expected. And for those of you, again, unaware, we talk a tremendous amount here at TheoTrade about expected move. And just give you a quick kind of initiation to this. Yesterday, very simply put, I'll freeze the screen for a second. Here happens to be the SPX April 24th expiration. That's, of course, today, but I'm looking at this from yesterday. And you can see that yesterday, there was as much as a $35.50 expected move in here. Obviously, we're well within those means. It's also incredibly important to recognize that the entire trading week, we were looking at a $47 expected move. So what does that mean? Okay, this is what's important. You know, you tune into these videos on a day-to-day basis. You're like, okay, when's he going to talk about direction of the market? Absolutely. Okay, first and foremost, the hash marks that are on this screen over here are indicative of that $47 expected move. Now, I put on my screen, obviously here and here, this is the expected move from the beginning of the week. Okay, and that's the range ultimately we can move within, or are likely to move within, okay, this week. We're pretty much halfway home to the upside. So one of the things that we'll use during the week, and again, throughout the course of the week, is if you see us actually get up in the neighborhood of the 23.95, you may have a shortable position at that point in time. One thing you have to also recognize over here is that volatility today is completely collapsing. Along with my hopes and dreams being that I'm quite bearish lately in the markets. So volatility is crushed like my soul being a bear right now. But volatility has come off dramatically. So for us at this point to see another 25-point move to the upside, okay, that is a very, very far cry from the capabilities, I think, of the SPX at this point. Most of the energy is out of the move early on in the week. However, you have to keep in mind, not only do we have major news events coming as the week progresses, possibly a new tax plan, but we also have earnings all on Thursday night, market-moving earnings on Thursday night from the likes of products like Google. Google hitting an all-time high today. Here's another kind of astounding move to me. This much more so than the move we saw inside of the SPX over here, but Google making almost a 20-point move to the upside just prior to an earnings announcement. Okay, I'll look at this later in the week for the possibility of a trade opportunity, a little bit of buy the rumor, sell the news. Maybe we fade the move into Google's earnings. But all on Thursday, you know, we have the likes of Google and Amazon, Microsoft, Starbucks, all pretty much coming out. It's the biggest single earnings day this Thursday. Again, in addition to it, you've got the tax plan. So I'm very surprised at this point in time, for those of you that do look at the VIX, to see the VIX completely collapse back down, okay, and is likely going to close today, and we're going to close in the next minute, inside of the 10 handle, okay? This is a close, and it's one of the lowest closes we're going to see on the VIX, okay, in really recent memory. I mean, all of a sudden, on one rally in one day, that isn't even that astounding. We saw a rally even last week of this magnitude, you know, of 20 points. But a rally of this magnitude to see volatility come off this much is pretty astounding here. And it's not just in the VIX. We're also seeing at the volatility futures, the VVIX. It's all of a sudden, everybody put away all your weapons and ammo. The whole world is going to be okay because of the French election. And, you know, I back away from this and try to be as objective as possible. But at that point in time, like, I'm just not buying it yet. okay, the heaviest risk in any given product was to the XLF, okay? And the XLF, its volatility has not in fact collapsed, okay, like the rest of the S&P 500 did. So this one's kind of notable because the XLF, and again, for those of you that do not follow expected moves, right, I'll take you a little bit more tuned into the expected move here, but the XLF, as of last night, okay, was sitting at a 25 volatility, right, looking for about a 67-cent expected move, okay, on the entire week. Well, today, there's the closing bell. Today, the XLF has made a 52 cents of the 67-cent move. However, what's interesting to me is where that volatility got collapsed and crushed down in many portions of the market. The financials remain, okay, at north of a 20% volatility and still are projecting a 43-cent expected move for the remainder of the week. So this is an area to keep your eye on. The only thing that to me is very, very notable, so like what's changed, okay, over the last 24 hours. Obviously, volatility has been crushed down. The markets have actually popped to the upside. Again, to me, this is nothing in terms of an astounding rally. A 35-point rally would have been astounding. To see us only move inside of what's expected, and speaking of what's expected, there was absolutely no volatility throughout the course of today's trading session. A very, very light, okay, volatility and very light trading range. But as I was saying, you know, as to what has changed inside of the last 24 hours, yeah, the market's popped to the upside, nothing astounding. Volatility to me is astounding. The collapse down. Again, the VIX, it's down 26%, all right? That is a monstrous move. If you're not comfortable looking at the VIX, look at the volatility futures. They're off almost 12% over here. All the volatility products, again, being crushed down. The area, though, okay, that still kind of surprises me, the bonds. The bonds barely backed off today. 22-tick move, okay, is negligible. In fact, the bonds, if anything today, made a similar to move to really in respect to a move that they would make on any given day. You wouldn't know that volatility was crushed by 26%. And this is something we're going to key into throughout the rest of the week. Okay, if the risk has completely abated in the marketplace, why do the bonds, okay, remain relatively elevated? Again, after all, we're still trading at a 153, okay, and 14 tick, which is basically 153.5 range after, again, this monstrous rally up. In addition to it, keeping eyes, of course, on the energy sector, which, again, on a percentage basis, fell by the wayside. All right. What really drove a mass amount of this rally today was very specific. The leading sector happened to be in financials. Okay. You can see also we had almost full-blown correlation. This is 90 advancing products inside the S&P 100. Okay. But once again, I'll bring up the sectors themselves and you can see the clear leader was financials. Yet those financials did not get a tremendous amount of participation and sell-off from the bond products. A lot to think about here for the next couple of trading sessions. Again, if we do continue to rally on the SPX, look for the upper expected move, okay, to be threatened, and most likely is coming in off that level. That is, if we come up anywhere near the 23.95 level on the SPX, the market's ultimately backing off. You know, a lot of traders would look at this and say, hey, easily we could hit next to what? You know, 23.95 or 2400 by the end of the week. Great. If we do, this gives us a shortable opportunity, okay, and an entry point at that point in time. Think about it throughout the rest of this week. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.